So just got back from Tempe making an offer on a single family residence, 5 bed, 2 bath that we're looking at doing a co-living strategy on. We'll turn that 5 bedroom to a 10 bedroom potentially. I actually did a vlog, this most recent vlog, 148, where we walked through the property. I talked with my architect, formed a partnership with one of the largest roofing and construction companies here in the Valley. But that's actually seen before you here. We're actually, actively talking, walking, and, talking about the opportunity available, turning it from a single family to a multifamily zoning, not zoning, it's zoned multifamily, but getting it permitted as a multifamily unit with upwards of 10 bedrooms within the structure. It's got enough square footage under the current roof that we can expand this home, from a full scrape that was rebuilt. That home's already rebuilt underway, new foundation, structure completed, plumbing and electrical 90% complete, HVAC partially complete. This is not an early stage risk. This is stepping into momentum with infrastructure already in place. The opportunity is the current layout being permitted for 5 beds, 2 baths, and converting that to a 9-10 bedroom rentable unit, expansion 7 bedrooms, individual lease, room by room strategy. So Pad Split's a big tech platform that actually promotes a lot of this stuff. We're doing 2 of these. We've got one at 1318 East Cedar, and this one actually just went under contract today. I'll be submitting my earnest money deposit, but our offer is $300,000 on this single family residence. We'll rehab the property, put probably $600,000 into the property, using $100,000 in interest and carry costs. Ultimately, have an all-in basis of about $1 million. $1 million on this property, yielding the pro forma cash flow nets about 10 to 12% as an exit. So as we stabilize this unit, we'll talk about it a little bit more and offer it within the Silvercrest portfolio. And Silvercrest currently targets leased land, manufactured home notes yielding 14 and 15%. And that's kind of why I came on right now, because we're currently receiving $19,000 a month in passive cash flow on notes just like this here. Lot 20 in Mesa off 8 major cross streets of Ellsworth and Broadway. So this is in a note investment strategy opposed to a potential equity and debt structure we'll offer on the co-living properties. But performing debt in senior lien positions, cash flowing outside complications of management, maintenance, all the things that come associated with owning an asset. We buy a pro forma note, first lien position that's been consummated, qualified, and cash flowing, and earn interest based on a consummated deal. So no hedging on appreciation, just virtually buying an asset and getting the income from somebody's qualification of them buying this property, as you see before you. This 3-bed, 2-bath, lot 20 is currently performing in the Silvercrest portfolio, one of 20 positions. It's a 3-bed, 2-bath, year 2012, off major cross streets of Ellsworth and Broadway. We bought this home for $80,000 and put about $10K into it and sold it for $119,500 with Wynn Mobile Homes, the largest dealer of manufactured housing. Wynn made the margin, Wynn Mobile Homes, like $20,000, $25,000. Seller financed the home, got the buyer borrower underwritten to Dodd-Frank compliance, originated the note with the licensed mortgage officer, and Silvercrest bought the note and absorbed it in the fund for $109,500. At $109,500, we receive $1,361 a month in first lien position every 5th of the month in automatic funds transfer services. And my accredited investor participating in the fund receives a 10% return for a 1-year term paid monthly, or a 12% return and a 3-year term paid quarterly. And you can actually view the photos below. But at the end of the day, this is full cycle. As we walk you through a real deal inside the portfolio. This one's in Mesa. We acquired the asset, like I said, for $80,000 and positioned it inside a strong community. Now, instead of flipping it for cash, we sold it for terms. Created a note at $109,500. $109,500, producing $1,361 a month on a 20-year amortization schedule secured by this home, as you see before you. So instead of a one-time profit, we created a long-term financial asset, manufacturing a financial instrument. This is what most investors miss. We're not just buying real estate, we're creating paper, turning housing into predictable collateral-backed cash flow. And here's why it works. Affordable housing has a real demand. People say they pay, people stay, they pay, and they protect the asset. For us, if we can get a quality collateral with a deserving borrower in the Mesa market, with skin in the game, first lien position, a fixed payment stream, and income backed by real housing, that's truly a generational opportunity. Why? Because affordable housing is the biggest need in the nation and little to no available financing on these properties. So just understand that's a performing financial asset. That's how we go from property, note, to passive cash flow, and repeat at the end of the day. What's the strength of a note, that's performing currently in Silvercrest, bearing us $19,000 a month? Well, with a 2% default rate and as a 3-bed, 2-bath, what are the alternatives for this individual if he does default? Average 3.2 on apartments.com with the lasso here is $2,000 a month. You see some a little bit lower, but they show scarce availability at the end of the day, but really it's $2,000 a month. So if that individual really was feeling some type of hardship, he'd likely, either let the car go or, let some of his vices go at the end of the day, some coffee, things of that nature. They look to other problems within their lifestyle opposed to sacrificing on their home. And that comes to fruition, and we bought that note via mobile mailbox money. That's mobile home mailbox money. Silvercrest Opportunity Fund is the accredited fund currently receiving $19,000 a month in passive cash flow. So opposed for an investor to buy one note with one one note, one investor, at the end of the day, they participate in 25 positions and they get a per unit owner share in a performing portfolio. So unless 25-30% of my portfolio goes non-performing, you're covered. The fund covers any non-performance. It's virtually like going to buy a CD for a 1-year term, but you're making triple the monthly distribution on acquiring a per unit owner share today with Silvercrest Opportunity Fund. These notes are provided and originated by the largest dealer of manufactured housing in Arizona, Win Mobile Homes, license 8670. So that's the little presentation for the notes actually performing in our portfolio. A little update on the offer that we're making today. It's a $300,000 offer. Hopefully we'll turn that to $1 million asset, and at pro forma that could be worth a lot more, yielding $9,000 a month in passive cash flow. That's virtually $1.3 million transaction. So we stand to make on exit, at the end of the day, a couple $100,000 if we don't sell it to another entity or raise the capital on an equity and debt structure for affordable housing, affordable rentals here in the Valley under Silvercrest Opportunity Fund. That's just a quick check-in within the day. We've done a vlog. We've had a couple meetings this morning, met with the wholesaler, met with my contractors, my architect, and we're going to go submit earnest money deposit before 5 o'clock, talk to our agents to see what other notes are actually coming available. View the mastermind. We talked about the current notes that are available via mobile mailbox money for one investor, one note, and you cash flow and earn interest in as little as a 30-day program. That's like $50,000, $60,000, and $94,500, yielding $500 to $1,200 a month in 30 days upon your acquisition. That's one step closer to financial freedom. What do we call that? Mobile mailbox money.